Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So actually, this week probably it makes no difference what particular currency to watch at that, because this market's gradually coming to Christmas holidays, activities become lower and lower, and I know that many traders just do nothing on a pre-Christmas week, so maybe indeed some reason stands with that. Well, I have checked the major currencies across the board and actually do not see something really very interesting. So on the cable, for example, you could see that the first euphoria concerning and around the interest rate change, hiking of the interest rates, has finished very fast. It's halted fast, and market actually returns back down, just because it reflects the still consistent problems in the economy of the United Kingdom, and in general, Great British pound currently looks definitely weaker compared to the United States dollar in the medium-term perspective as well. So that just set the status quo that exists currently in the market. The one thing that probably does matter to us currently is our potential double repo pattern that we have discussed on the New Zealand dollar. So it has not been formed, and this is also important sign. Let's take a look. Market actually, or better to say, it's even had double repo failure. So as you can see, we still have come to close about the 3x3, and then it's collapsed. So this points on some bearish pressure on the demand for the United States dollar. Why this is important? Well, this is indirect sign that our suggestion on the euro currency that we have made in the weekend, based on the fundamental analysis that we have made, so that still we can't take off the table the chances that market will keep dropping to 1130 area. So currently we think that is the most probable scenario for the euro currency. Maybe it will not happen this week, because market could go to flat as close we will come to the holidays. But in general, the signs of the bearish pressure exist here. This also explains the sharp reversal of the day when the European Central Bank announced so-called hawkish statement. And at first, it has led to some upward action, but it was reversed back on the next session. So all these things makes us suggest that we still could get downward action. And in general, if you'll take a look, we have the bullish trend, but price action is not bullish, and some signs of the bearish dynamic pressure exist here. As we said, the most probable target here is 1130. This is extension to the downside, the potential butterfly shape, and daily oversold. On the 4-hour time frame chart, recently we also have got minor grabber here that suggests downside action. But at the same time, we have a bit tricky moment here with the fast upward retracement. So if you remember, we decided to keep an eye on the bread and butter, and although we do not have a pure shape, I will show a bit later on hourly chart, or better to say on the 30-minute chart, but by its nature, we still have it. It's just because we have dropped down and first upward retracement. So by momentum, this is the features of the momentum trade, these features of the bread and butter market mechanics. So with this grabber, it theoretically suggests that market should start dropping right now and taking out of these lows, which actually suggests for downward continuation. But at the same time, we have upward thrusting candle here that suggests it may be a bit stronger upward continuation. What we should do in the current circumstances? So first of all, let's take a look at the 30-minute chart. On the 30-minute chart, we have the ABCD pattern. OP was standing right here, and market has passed through it without any respect, so as it doesn't exist. Now we stand in the first bounce. The upward acceleration to the OP suggests that maybe after some retracement, this market hits the first fib resistance 113. Market could try to make final effort to complete the XOP, so around 1312 area. The XOP creates the agreement resistance with the major 618 support, and potentially it might be the butterfly. So, but this suggests that grabber will be cancelled, and we will get a bit different background for entry. what to do. So if you would like to take position right now based on neck rubber, as you miss and you're waiting, or you're just warning that you missed the opportunity for trading, we suggest that anyway it would be better to place stop not above the grabber but above the XOP. It's just because if market still will complete it, you will get another additional setup where you could add more to average your position, or at least you will not be washed out occasionally while market will go to the XOP and keep bearish context valid, but you will be out right in the moment where a theoretical downward action should start. This is the first moment. This is the same logic as also if you are prefer to use the scale in. So if you have the grabber, you take them 30-40% of your position, then see what will happen. If market will go higher, you add more, and then take part in the trade. For others who prefer to wait for a better entry opportunity, you could do nothing here and watch for 113, 113.12 area. Once the butterfly and XOP will be completed, that will be good background for scalp short position, as market here, if even we will not get the direct downward continuation, but bounce down here will be more or less around 30%, and this will be, well, at least 30-40 pips of the result that you could get. So that's one important moment here that we have discussed. Mostly it relates to the entry technique and what to consider if you would like to take the position. Well, that's actually all, guys, that we see currently in the euro currency. Let's see how the situation will play out and whether we will get the downward action starting around 113 area.